Good morning, traders. It is Friday, July 8th. We've got the jobs report coming out in about a half an hour. We're going to get into some market analysis. I like what I see in the market right now. My pick is going to be a bullish pick. Let's get started with my previous pick. That's how I like to start all the videos off. That way you can very quickly see how the trades are doing from one video to the next. RBLX. That was my pick from the last video, and it came in right here. I was looking for a bullish market move, and I got one. Unfortunately, the stock has not been able to advance. I still really like it. So let's take a quick look at what's happened. I did get the market direction right, by the way. Market has been moving higher, but the stock has had to consolidate some of these gains. That was a very long bar, and it tells me that the stock still wants to go higher. It's hitting some resistance right here at the 100-day moving average, and that's why we wanted to see it rally above this long candle right here. So the caveat to the trade was that we want to see the stock above $40.35. If the stock goes above $40.35, I like it, and I think you should buy it today. You don't have to rush in. You want to see a nice reaction to the to the unemployment report. If we get that, this stock is going to move higher, and here's why. You can see you've got this beautiful breakout here through horizontal resistance. It comes up to the 100-day, and it preserves all of these gains. So buyers are starting to come back in with greater conviction. We preserve half of this long green candle. Very important. So we've also, in doing so, preserved this breakout. I love the fact that the stock made a higher low double bottom. There's your low, higher low double bottom. This right here came when the QQQ was making a new 52-week low. So tech stocks are getting buried, and what does this stock do? Higher low double bottom. That tells me that buyers are lined up. Yes, we've got a really nice rally here. We're trying to get through this major resistance level. Once we close above that 40.35 level on the stock, I believe it is going to have another big leg higher. I love it. You can sell out of the money bullish put spreads. In that instance, I would key off of that 50-day moving average. It's going to continue out this way. You've also got the upward sloping trend line coming in, probably around the $32 level. Make sure that you close the trade down before earnings. I like to sell those spreads so that they expire before August 15th. So choose expirations before that. I like RBLX. This stock is going to be blowing through this 100-day moving average if we get the type of market rally that I think we're going to see. So let's take a look at the market very quickly. This is a 5-minute chart of the SPY. You can see how we had this opening gap higher. So let's go into a 15-minute chart just so we can see that a little bit more clearly. This is an opening gap higher, but what's also significant is that it was able to get through the prior day's high, which we had a nice rally. We also had a nice rally in here. So let's zoom out one more time and take a look at that daily chart and see what it is telling us. So we get this nice little rally here. We get this big reversal bar right here, this bearish engulf. That looked pretty bearish. It looked like we could come down and test this low. But instead, they try and nail it, we bounce. They try and nail it, we bounce. Try and nail it, we bounce. In all of those instances, look at the spring that the market has in it. So those early lows, each one of these days got gobbled up, closed on the high. They try and nail it the next day because this is still in the back of everyone's mind. We got to test the bid, got to test the bid. Here we go again. Gap down, support established, rally the entire day. This is why I was bullish. This is why I picked RBLX. We still have a resistance level to get through right here. I don't know that the market will be able to do that. It's all going to depend on the reaction to the jobs report, but you can see resistance around that 392.50 level. That's a critical level. We also have a longer term downward sloping trend line. We could start it here. We can drop it like that. We've got another line that we can draw. These are going to be major resistance levels, and the market's going to struggle with it. You can see that comes in around 395. So I believe those resistance levels are going to stay intact. This is a nice little bounce here off of this low. We're going to have earnings season coming up, and then in about 2 weeks, we're going to have the FOMC statement. They're still planning a 75 basis point rate hike. So what we could see in that time frame is we could see today a fairly soft jobs report, and I'm not expecting that. So first of all, let me say I think the jobs report is going to be in line with expectations today. So we're not going to see a big fall off in employment. And the reason that I feel that way is because the initial jobless claims the last 4 weeks have been very, very steady. So I'm looking for a stable jobs report today. That's going to be good for the market. It could be a Goldilocks number because it's going to keep sellers at bay and it's going to keep buyers at bay. Not too hot, not too cold. And I think that the current market trend, which is right here, is going to favor the upside this morning, and then we could see resistance around that 395 level in the next week to 2 weeks. Earnings season has typically attracted buyers. We're going to have earnings announcements starting next week. So I think this is just a little bit of excitement heading into earnings season. I don't know how earnings are going to turn out. Guidance will be critically important, and that could be one reason that these resistance levels stay intact, is because guidance will be lowered because of supply disruptions. They've also got higher input costs in terms of wages and raw materials. Those could impact the bottom line. We also have the COVID shutdown in China. All of these things could play a role in corporate guidance. And I believe that asset managers longer term are going to be passive in July, August, and even early September because the Fed is going to be in recess and you're going to have all these economic numbers coming out without anyone minding the shop. And typically, August is a very dull, very soft month. So it wouldn't surprise me that we get a nice little rally here into earnings. We test that downward sloping trend line. We've got a range established. There's the low, there's the high. We chop around in it, drift back down, test that low sometime in August. Make sure that buyers are still there. So longer term, you can see I'm fairly neutral in here. I think we're going to go up a little bit, then I think we're going to come down and test the bid. Overall, I do feel like we're starting to see a little bit of market support in here longer term. And the key to that is that tech stocks are finally catching a bid. They have been annihilated, and I'm seeing some strength in the tech sector the last couple of days. Let's take a look at TLT. You know, I've been referencing that. You can see this nice bounce that we had in TLT. This is a bearish engulfing candle. It was a gap reversal. TLT was up nicely on the open and it spent the entire day selling off. This was Wednesday. Thursday, we had follow through selling. Now you can see this upward sloping trend line is going to be challenged on the downside. A decent jobs report today is probably going to break this trend line because everyone is going to feel that the Fed has latitude because the economy is still on strong footing to continue to raise rates. So I would like a strong jobs report because it's good for economic growth. The market may feel like, this gives the Fed a chance to raise rates, so the market may not react as favorably. What I feel we do not want to see is deteriorating economic numbers during July, August, early September when the Fed is in recess. That I think is going to make the market very, very nervous because they are going to expect that the Fed is still on their tightening path. So, very short term, which everything we're doing right now is day trading. I do not want to do any longer term swing trades unless I'm selling out of the money bullish put spreads on super strong stocks that have made a higher low double bottom in the last 3 weeks. Those stocks are telling me that they have really nice support and they should weather any kind of sell off very, very well. So what could we be looking at today? Let's go in, let's run a very quick search, see what we come up with here. I've got option liquidity very high at a 2 or better. I'm also looking for a stock that was above its prior day high yesterday. Remember, we had a really nice market rally. I also want to see a stock that's been able to get above its 50-day moving average. That tells me that there's some underlying strength in that stock. We're not bottom fishing per se. I also want to see a stock that has recently broken through a downward sloping trend line on a D1, a daily basis. So let's go in and take a look and think about why this last variable is so important. What has the market done? Well, the market's been selling off and selling off. Now, all of a sudden, you've got this little bounce right here, and these downward sloping trend lines from a longer term perspective are intact on a daily basis. How nice would it be if there was a stock that was already getting through a downward sloping trend line like that or like that? That would certainly be a sign of strength because it's able to get through that horizontal resistance. As I take a look at this list, there are going to be some really nice candidates in here. So don't feel like the only stock that I'm highlighting is the only one that you need to be watching. Due to the nature of the videos, I do zero in on one particular pick because we can't track them all. So this is an exercise you should be going through. Option Stalker Pro, we've got the best search engine. Here are the results. Let's click through them and let's see what we've got. Well, first on the list is Apple. Love it. Look at that nice defined downward sloping trend line. 1, 2, 3, 4, 5 touches. The more touches, the better because it validates that downward sloping trend line. Now we've got 3 stacked green candles in a row, higher low, double bottom through this horizontal support level. Little bit of a head and shoulders, but you'd have to get all the way up to here to break through that and confirm that pattern. I think the stock has a chance to do that. 50-day moving average right there. We want to make sure that Apple is staying above the 50-day moving average, and that is $146. So the caveat, excuse me, $145. So the caveat to the trade is the stock has to be above $145. We also want to see relative strength in the stock. You can see orange line above zero, relative strength. We'll go into a 5-minute chart on Apple. We want to see relative strength. We want to see relative strength before we start day trading it. So yesterday, if I had been putting out market comments saying, hey, here's a stock you should consider. I really like Apple, but we don't chase anything on the open. And that is what I would have told you. So you would not be buying in here. You'd be waiting for everything to settle down. You'd be waiting for the stock to regain its relative strength. Downward sloping trend line, breach to the upside. This would be your entry point in here because at that stage, you are confident that the market is going to be going higher. And there you have a nice entry point. If I get something like this, nice stacked candles through the high of the day, and then a compression, folks, I'm going to be taking my gains up there. That is a whopper of a gain. Beautiful, especially if you're trading options on Apple. Apple is going to be your pick of the day. We're going to take a look at some other stocks as well. Let's make sure that we've got our market bearings from yesterday. Let me talk about what I saw. So first of all, these gaps up are very dangerous because they are often faded. This one got through the prior day's high. Very, very nice. This bar closes on its high. But then we don't see a compression here where there's a lid, where there is resistance. And I can show you a day where this pattern reversed and it reversed hard. Didn't happen yesterday. Gave back some of the gains, still we're preserving that high right there. That's a good sign. Little nervousness in here. We recover that very quickly. Now we make a new high of the day. At this juncture right in here, I'm pretty confident that the market is going to continue to move higher because of this price action. The opening gap higher has been preserved. They tried to knock it down, found support right at the top of that green candle and started to build on it. And now we've got a new high. So these little dips in here, those are your buying opportunities. Those are your buying opportunities for the market. But overall, you should feel very confident that the market is making higher lows. The market trend is going to be higher. And Apple, on a dip like that with decent market strength, is going to be a buy in here. Stock continues to move higher. So I like Apple. These mega cap tech stocks tend not to be massive movers because they're very thick. There's lots of volume in it, but there's also excellent liquidity. So wait for those little dips, wait for those buying opportunities. Make sure you have relative strength, and you'll have a really nice entry point on Apple. I think it could continue to move higher. That 50-day moving average holds. We get a good reaction to the jobs report this morning. All systems go. So let's continue. I'm going to put the list back in front so you can see the rest that we're going to be clicking through. I'm going to be attracted to the big names like Amazon. I'll tell you why I like it, why I don't like it as much. Microsoft, very nice. Those will be your big names in here. BYND. So click, click, click. Let's go through. I'm going to focus on daily charts here because I'm not going to go into the 5 minutes. AGEN, cheap stock, $2.50 stock. Really nice stuff. Excellent volume in here. And you can see how it's continuing to lift off, but it's a cheap stock. So I'm going to continue to move on. Amazon, really nice 1, 2, 3, 4 confirmations on this horizontal support level. I like it, but because it's been testing support, I don't like it as much as Apple, although you can see that downward sloping trend line has also been breached, and it is also above that 50-day moving average. So selling out of the money bullish put spreads on Amazon could work. I don't like it as much as Apple. Beautiful trend line breach right there. Gap up above all the major moving averages. AXSM has been actively traded in our chat room the last few days. Beautiful pattern. Man, that is just a gorgeous pattern. You know that once you get above these major moving averages and that the stock is able to preserve all of these gains, there's your open on that long green candle, even the halfway point preserved. Now it's gaining strength in here. Buyers are convinced that the stock wants to go higher. They get more aggressive bidding it up. See you later. BB, nice downward sloping trend line here. Has a little bit of room at 625 to the 100-day moving average. Looks good. Higher low, double bottom. So you know I like BB. If you're looking to trade a cheap stock, I like it. You can see the volume is decent. It's got good relative strength. BB looks good. BYND, pounded down 1, 2, 3, 4 lines of support right in here. Downward sloping trend line, breach to the upside, stacked green candles. Volume, not great, but improving here recently. Yeah, looks pretty good. Not as good as Apple. Chewy, I know I've highlighted recently. There's your trend line, breach to the upside, checks that 100-day moving average, gets back above it, and now it's ready to go. So I like CHWY also. It's a very choppy stock, though. You can see big moves. So this one moves around. Everything here looks great. Kind of like RBLX, where it had to test this big move and it retraces half of that move, finds support, and then creeps back above that 100-day moving average. Again, volume, not great. It's okay. We'd love to see higher volume. Let's take a look very quickly at the market because we got to get this volume up. Look at this. This makes any rally very suspicious, very vulnerable because we are in very light trading right now. So all these rallies, stacked green candles, they can all look great, but it's not coming on any volume. We need that volume. Once I start to see that volume and a rotation into tech, I'm going to feel a whole lot better about what the market might be doing. Haven't seen it yet, so I'm very suspicious of these rallies. FSL, there you go. Beautiful, higher low, double bottom above the 50-day. I really like this stock. It's another cheap one. It's a $4.50 stock, but very consistent price action in here. Now I'm just going to start clicking through. Yes, this has been one that they've traded in the chat room. We got some bullish explosion alerts on it. Been nice. This is an ETF, biotech. Microsoft, nice. You've got a better downward sloping horizontal trend line right in here, and that's probably what signaled it on my algo search right here. This is a new trend line breach on a daily basis. Remember, that was one of our key variables. We want to see stocks that are able to get through these resistance points. Microsoft has been able to do so. MVIS, beautiful breakout right in here. You can see how it's gaining some momentum. Another cheaper stock. You can see that it's got resistance here at that 200-day moving average. Now I've got an alert line set on it. If it gets through that, I'm much more interested. NVAX, nice breakout here through the 100-day moving average, continuing to power through. Downward sloping trend line, breach to the upside right here. Looks pretty good. A lot of these biotechs you have to be a little bit careful with. They get very hot and cold. SENS, nice little breakout there through the 50-day. SPCE, you can see a lot of them are bottom fishers in here. A lot of these can really get going. Higher, low, double, bottom. These are the stocks that I really like right now. And I think that you can sell some out of the money bullish put spreads on it because they've already shown that they have strength. Or in the case of SPCE, $5 stock, just sell some naked out of the money puts with the intent to acquire the stock if you like the stock. I love this downward sloping trend line through the 100-day, couple of long green candles. You can see how the midway point was preserved, and now the stock is through that horizontal resistance and the 100-day. There's your next resistance point, and I like it here, and it's got some room to run. But I also want to know if it breaks through that TWOU. Couple more. XAIR looks great for a quick little day trade. Don't know the company. And that is your last symbol. Apple is your pick of the day. Do not forget about RBLX because that is still a pick of the day. So you get two of them today. RBLX, we just need to see it above that $40.35 level and on a decent reaction to the FOMC statement, or excuse me, the jobs report. If we get that good reaction to the jobs report, you will see this stock get through that $40, $35 level, and then whoosh, you're going to have a big day in it. So look for relative strength in it as well. Trade well. Know that the market's got a decent little bid to it right now. We had these checks right in here where we bounced, bounced, bounced. So when the market can't go down and it's convinced that there's some support forming, what does it do? It goes higher. And it goes higher until you start to form resistance like this. Try, 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 try. Couldn't get through. See you later. Back down again. So for the time being, know that this nice looking little rally is on light volume and you're getting a little bit of excitement heading into earnings season that starts next week. That's why we're going to favor the bullish side, looking for stocks that have broken above a D1 downward sloping trend line. Good luck with your trades. RBLX, Apple, those are going to be leading the charge higher if we get a decent reaction to the jobs report this morning. Trade well. We'll see you in a couple days. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.